Hey, Bobby Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as Apple, Nvidia, and AMD, Qualcomm and Amazon, Nike, Starbucks and Disney, Walmart, AstraZeneca and John Deere, JetBlue and Chevron, Barrick Gold Corp and Palladium, Tesla, Enphase Energy and First Solar, Neo, Twitter and Snapchat, Square Cash and Tiger, Shopify, Asana, Palantir, Fastly, Bitcoin, Ethereum, and Solana. So we'll start with SPY. It forms a wave 1 and a wave 2, then goes on a wave 3 that did go past the length of wave 1, placed at the wave 2 low. I believe now it's ended wave 4 at the 38.2% retracement. So above the 50% fib of 400, the length of wave 1 places the wave 4 low, gives a wave 5 target of about 550. Here's what that would look like on Apple. Apple forms a wave 1 and a wave 2, then goes on a big wave 3 that's subdivided into 5 waves, and I believe now it's ended wave 4 at the 50% fib. So above 150, the length of wave 1 places the wave 4 low, gives a very conservative wave 5 target about 192. The length of wave 3 places the wave 4 low, gives a more accurate wave 5 target of about 217. Now, I don't think Apple's going to go below 249, but the 61.8% retracement is 141. That's a little wider for Apple to be above. I think it'll hold this low of 150 and go on a wave 5 higher. That is the length of wave 3 places the wave 4 low. That's where a wider level of 141 would come in, because 217 could eventually be the target for Apple. Here is Nvidia. It's a wave 1 and a wave 2, then a big wave 3 that goes way past the 161.8% extension of wave 1. I believe it's ending wave 4 around the 50 to 61.8% retracement. So this low right here originally of 195 hasn't been broken, but we're getting pretty close to it. 165 would be a much wider level, but I think eventually the length of wave 3 places the wave 4 low is going to start a wave 5 higher that ultimately takes Nvidia to the 430. So it's getting close to 195, 170, 165 is a little wide. So we'll talk about AMD and Qualcomm possible other views of the semi sector. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So I think the fact that this huge wave 1 that occurs from May to November, there was exactly with Tesla's rally. I think that we have supporting evidence from Tesla that it's unlikely that the semiconductors are going to be crashing while Tesla rallies. I think we have evidence that Tesla is going to be rallying. I think this is a wave 1 and a wave 2. So AMD and Nvidia should be rallying with it. I think Apple also supports the idea that these semiconductor stocks could rally. The length of wave 1 places the wave 2 low, gives a conservative wave 3 target of 180. So this is the 78.6% retracement. This is a wave 2. There's not really another way to count this unless AMD goes below 72, which I don't think it will. That this is a wave 1 and wave 2. The minimum wave 3 target is 180. We could go way past 180, because usually wave 3 is bigger than the length of wave 1 places the wave 2 low. It can go all the way to the 161% extension of wave 1. Then we could have a shallow wave 4 that retests the wave 1 high before wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, then above about 72, there is a path that could take AMD up to the 250. So that's a better kind of view than Nvidia. I like Qualcomm a lot as a view of the semis. That's probably the tightest view of the semis. It's a wave 1 and a wave 2, a big wave 3 and a wave 4 that ends at the 38.2% retracement. So I think from this low, Qualcomm formed a wave 1 and a wave 2. So it can enter a wave 3 that is at least the length of wave 1, placed at the wave 2 low. Above 122, Qualcomm can go to 203 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low says ultimately Qualcomm can go all the way up to the 250s above 122. So that's Qualcomm. Here is Amazon. Amazon forms a wave 1 and a wave 2, has a big wave 3. I think this is an ABC correction that's ended a wave 4. Right at the 50% retracement. So above that low, about 2,700, 2,666, the length of wave 3 placed with wave 4 low can take Amazon on a wave 5 higher all the way to 4,821. I think that Amazon is a big holding of XLY, and I think we're starting to see more evidence from these XLY stocks. Here's Nike. It's a 1, 2, 3, 4, 5 big wave 1 and an ABC correction that I believe has ended wave 2 at the 50% retracement. So above the 61.8% retracement of 105, the length of wave 1 placed at the wave 2 low can take Nike on a wave 3 higher to about 235 in the big picture. So all of the XLY holdings, I think Tesla, I think Amazon and Starbucks, they're all kind of setting up to do the same thing, right? It's unlikely that these 4, 6, 7, 8 months from now are going to have done completely opposite things, right? It's certainly a possibility, but they're all in XLY. I think Amazon and Nike and Starbucks and Tesla, they're starting to kind of send a more cohesive message above the 61.8% retracement of 105. That's a little wide, but I think the length of wave 1 placed at the wave 2 low says there's plenty of upside for Nike. It can go on a wave 3 all the way up to 235. The cost of clothes could get more expensive. The cost of, food and frappuccinos could get more expensive. This is, if they aren't already. Let's say 1, 2, 3, 4, 5, big wave 1. And the ABC correction wave 2, we're at the 61.8% retracement for Starbucks. So the length of wave 1 placed the wave too low. Says that we could see a rotation in the inflation sector. Food prices are going to come hit the consumer, right? I'm not trying to be an economist, but that's what the Elliott wave is saying. I think that's what the options market is saying. They're buying these straddles on Starbucks around 90, around 85, around these big round numbers. I think they're playing a large move. I think that move is going to be to the upside. The length of wave 1 placed the wave too low. Says that Starbucks can go up to 150 for a conservative wave 3 target. I think it'll go way past 150. But even if there is a shallow wave 4, the retest of wave 1 high, ultimately the length of wave 1 placed the wave 4 low. Says waves 1, 2, 3, 4, and 5 can take Starbucks all the way to 200. So above 66, there's a lot of reward for a blue chip. I mean, I talked about how it's Facebook, it's Nike, it's Disney, it's Amazon, it's Boeing. It's the stocks that the world runs on, right? I'm still trying to be an investor. Okay, these are kind of all the blue chips right now, the 61 to 78.6% retracement. Sometimes you have to zoom out like Disney. This is a 1, 2, 3, 4, 5, a big wave 1 and a wave 2, right? Everyone says they want to buy Disney, right, during these rallies, and then all of a sudden people are experts in, how the CEO is getting compensated anyway. This is a wave 1 and a wave 2. Well, I think Disney has a different thing going on. Anyway, this is a wave 1 and a wave 2 from this low that ended at the 61.8% retracement. So in the big picture, I think this is a 30-year wave 1, right? So Elliott waves are, they're about time and price. That's why a lot of times if I buy something that I want to hold for the long term, it's because time is part of the equation, right? Time is a part of the equation for a lot of the clean energy stocks, and it was a big part of the equation for a lot of the oil and the precious metal stocks. Now it's not so long term, but this is a huge wave 1 that lasts 30 years and a wave 2. So I think this is another wave 1 and another wave 2. Disney could be entering a wave 3 of a large wave 3. So this is quite the opportunity if it occurs. That this is the 61.8% retracement that's ending wave 2. The length of wave 1 placed the wave too low, right, can take Disney up to 250. And that's a conservative wave 3 target. A lot of times wave 3 goes well past the length of wave 1 placed the wave too low. But even if we had a shallow wave 4, the retest the wave 1 high, the length of wave 1 placed the wave 4 low, says if Disney's above 105, then the mouse can go up to 320, right? Don't politicize the market. You politicize the market, that's never a good thing. That's never a good thing, okay? They always want you to be, if you invest in Disney, then if you don't invest in Disney, then escape that. Anyway, this is a 1, 2, 3, 4, 5 wave 1 for Walmart and a wave 2. And this is another wave 1 and another wave 2. So these next stocks I included because they're boring losers, right? They're boring losers. I get it. But they're at all-time highs, right? So we have to find bear counts on these stocks. Okay, well, the market's going to crash while Walmart rallies because it's a consumer staple stock. Duh, puppy trades. Okay, all right. The market's going to crash while John Deere rallies because it's John Deere, right? Tractors and inflation. Okay. The market's going to rally while the market's going to crash while AstraZeneca rallies because the AstraZeneca's got all this special stuff. Okay, it's a healthcare name. Soon it's going to be more financial names. We got a lot of value sectors at all-time highs, right? I know it's QQQ's the fun ETF, but anyway, did the market crash while Walmart went on this huge wave 1 from March to October of 2021? No, of 2020. No, it didn't. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And I think the length of wave 1 placed this wave 2 low has given a conservative wave 3 target that's been met. Now, this wave 3 can go all the way to the 161.8% extension of wave 1, which is 169. What I'm trying to show is that even if there was a shallow wave 4 that retests this wave 1 high, the length of wave 1 placed at the wave 4 low can take Walmart all the way up to 178. I would believe this would end a red wave 3 from this low. We could have a shallow wave 4 and a wave 5 higher, but ultimately this could be a 1, 2, 3, 4, 5 waves impulse that in the big picture takes Walmart up to 200. So I think the path to get there is it's from this low. This is wave 1 and wave 2. The length of wave 1 placed at the wave 2 low has given a conservative wave 3 target. Even if we have a shallow wave 4 and a wave 5 higher, this red wave 3 can end at 178. We'd see a long consolidation period for wave 4, but then ultimately the wave 5 target could take Walmart up into the 200. So that's Walmart. It's a boring loser in the consumer staple sector. It also pays a dividend. A lot of these stocks pay dividends. So remember, the market's organized into ETFs. A lot of these dividend ETFs, they have the same kind of dividend holdings, and we're seeing a lot of them move. Here's AstraZeneca. It forms a wave 1 and a wave 2. It forms another wave 1 and another wave 2 from this low. So it's met that minimum wave 3 target, right? These silly equal lines that hit 71. But even if there was a shallow wave 4, which I would never short, right? The whole point of this is to say that AstraZeneca has confirmed it's within wave 3 of a large wave 3 from the 2020 low. This is wave 1 and wave 2. The length of wave 1 placed the wave 2 low ultimately can take AstraZeneca all the way up to 75. Even if there was a shallow wave 4 that retests the wave 1 high, the length of wave 1 places the wave 4 low, says waves 1, 2, 3, 4, and 5 can take AstraZeneca up to the 90s, right? So how likely is it that the market will crash while AstraZeneca goes to the 90s, right? Walmart possibly goes to the 200s. I don't think it's likely. I want to talk about a different healthcare name that might be a little better. Let me see if I can. All right, we're not going to talk about Pfizer. Oh, we will talk about Pfizer. Pfizer, one of my favorite companies. A big Pfizer fan if I can get this to load. Great CEO. Very cool business model. Anyway, this is a wave 1 and a wave 2. This is a huge wave 3 in progress. I think this is wave 1 of wave 3 and wave 2 of wave 3. We could see wave 3 of wave 3 in progress right now. This is wave 1 of wave 3 and wave 2 of wave 3. So the length of wave 1 placed with wave 2 low gives a minimum wave 3 target of about 66 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take Pfizer up into the 80s. So I think Pfizer and AstraZeneca, they're in the healthcare sector. AstraZeneca's already at new all-time highs. I think Pfizer is ending wave 2 at the 61.8 to 78.6% retracement. It'll hold above 45 and go up into the 60s, the upper 60s before a shallow wave 4 and a wave 5 higher. But ultimately, waves 1, 2, 3, 4, and 5 can take Pfizer up into the low 80s. Here's John Deere. John Deere is a huge holding of these industrial ETFs, right? So the whole point of all this, AstraZeneca, John Deere, right, Walmart, is that they're huge holdings of, for Walmart retail and consumer staple ETFs, AstraZeneca and Pfizer healthcare ETFs, John Deere and industrial stocks, right? So we have a lot of kind of holistic value sectors now that are at all-time highs. This is a wave 1 and wave 2. This is a huge wave 3 and an ABC correction that's ended wave 4. At the 23.6 to 38.2% retracement. So I believe it's within a wave 5 right now. Ultimately, I think wave 5 will be the length of wave 3 placed with wave 4 low. It's not going to be tomorrow, but I think that ultimately the wave 5 target is about 616 for John Deere. So we're going to see John Deere possibly in the 600s. We're going to see AstraZeneca, possibly in the 80s and the 90s with Pfizer. We're going to see Walmart in the 170s and possibly the 200s. How likely is it that the market will have crashed during that period? I'm not sure. Here's JetBlue. I think some of these transportation stocks, we're starting to see signs. I want to include Carnival Cruise Lines, but a lot of these airlines, they're on, yes, the bar chart straddle and strangle screener. All right, we just saw with oil, the entire oil sector, why it's so important to pay attention to this screener. But I think with airlines, we'll learn the lesson over and over, right? It's the same lesson over and over. This isn't a magic screener, but when they're loading up options on, especially value stocks, especially stocks that have a long trading history of options trading, not a stock that IPO'd a year ago, we see huge moves, and especially when it's the whole sector, right? They're all saying the same thing. A lot of times that's the next sector they get rotated into. That was certainly the case with oil. But anyway, I think what's going to happen is we're going to see, a new group of leaders emerge in the market. I think a lot of them will be in the tech sector, but I think a lot of them will continue to be in the value sector. And some of them, I think, will be in the transportation sector. This is a wave 1 and an ABC wave 2 for JetBlue. We hate talking about long-term counts, right? But I'll remind that Chevron was a long-term count long ago. This is another wave 1 and another wave 2 that's ending at the 61.8% retracement. So 9.89 isn't a bad level. That 78.6% retracement to say this is the super cycle, whatever low for transportation. Basically what just happened with energy could happen with transportation, where we look back and, I'm sure there's going to be some news headline that no one knows about except all the people who are buying these options. But the length of wave 1 placed the wave 2 low. The JetBlue can go to 26 above the 78.6% fib of 9 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low can take JetBlue up into the 30s in the long term. Now, I know what you're saying, puppy trades. I don't care about long-term counts, right? Long-term counts are boring, right? I want to buy options that expire in 3 weeks, right? Which you should only do if you talk to a financial advisor. But anyway, This is Chevron. This was a long-term count that I posted a year ago, saying that this was a glaring 1, 2, 3, 4, 5 big wave 1 and an ABC correction that ended wave 2 at the 61.8% retracement. All right, and what's going to happen? This is wave 1, wave 2, wave 3 for Chevron in the what's called grand super cycle all-time count. All right, this is a pretty big deal, right, for oil, right? If someone drives a car, they should probably care that Chevron just confirmed is within a massive wave 3. In the long term, the 161.8% extension is about 210, all right? Well, Puppy Trace, that's not too far away. I can, pay for it. I have a Tesla. All right. Here's the problem. ExxonMobil is still below the 2014-2015 high, and it's got the exact same count. So I hope I can get Zom to load. This is ExxonMobil. It's still below this exact same wave 1 high, right? It's about to play follow the leader. So am I interested in being into oil stocks right now? Personally, no. I did that before the war, okay, because they were on option screeners. But the reason that I'm not going to consider shorting oil or, calling tops, and I'm going to start saying the word long-term a lot, is because ExxonMobil is a wave 1 and wave 2, and it's still below that exact same wave 1 high that Chevron's already exploded above. So ultimately, if this is a wave 1 and wave 2, there's going to be a huge wave 3. And even if there's a shallow wave 4 that retests the wave 1 high, the length of wave 1 places the wave 4 low, says in the long term, we could see ExxonMobil go into the 190s. And we're starting to see, the correlation that a lot of people didn't really think was real, but there is a real correlation between the metals and the oil stocks. And we're starting to see now the metals are starting to join the party. So here's Energy Transfer. Played this with an option straddle when it was at about 10. I bought another option straddle at about 11.50 today. But anyway, it's been all over the bar chart straddle and string screener. So we'll see. I'll tell you guys how it goes. But I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. Those don't expire until January 2023. I'll just tell you exactly what I have. One of the straddles I have is the 10 call and the 10 put for January 2023. I bought that a few weeks ago. And then another one that I bought today was the 12 call and the 10 put for 2024 to kind of lock in the gain on ET. I want to share the straddles that I'm using for risk management, but anyway, we're just going to stick to the charts in this video. But I have a lot of fun stuff I've been working on that I'm excited to tell you guys about. Anyway, this is a wave 1 and a wave 2 for ET at the 50% fib. This is a more natural gas oil transportation play. I'm not really the super fundamental guy, but it looks like, this is more related to natural gas or something. Anyway, this is a wave 1 and a wave 2. I think it's within a big wave 3 to about 14, 15. I think this could be a roadmap for oil, and maybe the next stopping point is when ET gets to 14.50, the 15, the 161.8% extension of this wave 1 could be a wave 3 target. Anyway, I'll tell you guys what I do with my straddle when we get there. But anyway, here is Barrick Gold Corp. Barrick Gold Corp forms a wave 1 and a wave 2 from this low. They ended at the 61.8% retracement. Now, we've gotten a lot of really cool evidence. A long time ago in November, we had Pretium Resources, a gold miner, break above this wave 1 high. More recently, we've had Goldfields GFI break above this wave 1 high. And then very recently, we had Royal Gold break above this wave 1 high. So there's about 4 gold miners that have already broken this wave 1 high. I think that's huge evidence for GDX, GDXJ, silver, a lot of the silver miners, that we're going to start seeing a lot of follow the leader in the sector. If I showed, Royal Gold's chart, if I showed Goldfields chart, if I showed, I don't think PVG, they don't have that ticker on bar chart anymore, but all of them form this exact same wave 1 and wave 2 high. And there's a growing list of gold miners that are already above the wave 1 high. I think the length of wave 1 places the wave 2 low is ultimately going to take Barrick Gold Corp on a conservative wave 3 target to 35 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, then ultimately Barrick Gold Corp can go up to 50 where waves 1, 2, 3, 4, and 5 So that's Barrick Gold Corp. Here is Palladium. We'll talk about a few of the, silver miners. I talk about platinum a lot, but this is Palladium. I think it's another big piece of evidence for the precious metals. It forms a wave 1 and an ABC wave 2, and I think this is another wave 1 and another wave 2 that's ended at the 61.8% retracement. So above the 78.6% fib, Palladium can enter wave 3. The length of wave 1 places the wave 2 low. Says Palladium could be going up to the 350s. This is PALL. I talk about PPLT a lot. But this is Palladium. It was a wave 1 and wave 2, and it broke above that wave 1 high a long time ago. I think it ended wave 2 at the 61.8% retracement. Now we'll see it hold 176, and it's going to go enter wave 3. So I am a pretty big diversification person. Diversification got a bad rap because a lot of things fell in 2020, a lot of things fell together, right? Basically every asset class besides the ones that are directly inverse the market, like gold and silver, they all participated in the 2020 sell-off, right? So a lot of people have really shunned diversification, but this more recent correction we've had in the market, we've had a lot of sectors that have done, pretty well. One of the ones that I've been in for a little bit is uranium fuels. I think this is a wave 1 and a wave 2. I think this is good evidence for the energy sector. Another, good piece of evidence not to short oil would be uranium. A lot of these, stocks like UEC, they've already broken this wave 1 and wave 2 high. This is in a lot of mining kind of stocks. This is a wave 1 and wave 2 for UUU. Ultimately, this is a large wave 3 in progress. This is wave 1 of wave 3 and wave 2 of wave 3. It's within wave 3 of wave 3 right now. Even if there was a shallow wave 4, the retest of the wave 1 high, the length of wave 1 places the wave 4 low. Because ultimately, I think UUU can head up to 18. The 161.8% extension of this wave 1 right here is 15. So I think UUU is going to 15 and then 18. Another good reason not to short energy right now. Here is Tesla. Speaking of energy, maybe we'll see clean energy join this party. I think Tesla is obviously a big piece of evidence for the market and the NASDAQ, but I think specifically the semiconductors, this is a 1, 2, 3, 4, 5, a big wave 1 and a wave 2. I think this is another wave 1 and another wave 2 from this low at the 61.8% retracement. So a big wave 3 is in progress. The conservative, I know it doesn't sound conservative right now, but it's getting more and more conservative, right? I love that when it gets more and more conservative. The conservative wave 3 target is 1400. Even if there's a shallow wave 4 that I would never short, remember, this is a kind of a data model, right? I'm not actually trying to predict the future. The whole point is fine. What would an eventual wave 5 target be? To define the risk. I think the length of wave 1 places the wave 2 low gives a conservative wave 3 target of 1400. Even if there was a shallow wave 4 that retested the wave 1 high, if wave 5 is the length of wave 1 places the wave 4 low, then we can see Tesla go all the way up to the 1900s for waves 1, 2, 3, 4, and 5. So there's a lot of upside for Tesla above this low that's getting far away from. I think that, we saw Apple and, Amazon, and I think Tesla, they've given a little bit more room against this recent low in February. And I think a lot of them could be wave 1 and wave 2 for Tesla. I think this could be, we could break above this high pretty quickly, right? And then it wouldn't just be value stocks. It'd be, now there's a big tech name that's at an all-time high. But anyway, we'd probably ignore that too. There's Tesla. Here's Enphase Energy. It's a clean energy holistic analysis. A lot of people think, AMD and Nvidia are competing, right? So it's boo, AMD, yes, Nvidia. Tesla's competing with Neo, and Neo's competing with Plug. I don't know who Neo competes with, but anyway, this is a wave 1 and a wave 2. They're all in the clean energy sector. They're all in the same ETFs, right? So I'm rooting for kind of what a lot of retail traders think is the rival. No, that's my buddy if we're in the same ETFs. And Enphase is in a bunch of the clean energy ETFs. I think it's a big piece of evidence for the clean energy stocks. It's a pretty count. It's a wave 1 and an ABC wave 2. I think from this low, it's another wave 1 and another wave 2. It's really outperformed, in the more recent sell-off with a little bit of the clean energy sectors. I think we're going to see some of the small caps start to join Tesla and Enphase in the sector. Let's say wave 1 and wave 2. The length of wave 1 places the wave 2 low can take Enphase up to the 280s. But if it breaks this high of 282, then it's at least within a wave 3. Even if there's a shallow wave 4 that retests the wave 1 high, the length of wave 1 places the wave 4 low. All in all, could take Enphase up to the 450s in the long term. So above this, more recent low, about 110, 113, then we can see a wave 3 occur well past the 280s. Because a lot of times wave 3 goes to the 161.8% extension of wave 1, but just breaking this high, in my opinion, would open up possibly the 400s, the mid 400s in the long term for Enphase. Now that sounds crazy, but I think First Solar gives a lot of evidence that this kind of solar energy sector has been accumulated for the past 10 years. A lot of people think, I get told, oh, you're just falling for the solar utopia, right? The MM sold me a pipe dream about the solar utopia. No, I think that the MMs have been accumulating solar stocks for a very long time. I think this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2. But from a classical trading perspective, this wave 1 and wave 2 is a breakout and back test of a 10-year base. And I believe the wave theory is going to play out with that. The length of wave 1 placed at the wave 2 low, the 61.8% retracement, says FSLR could be within a wave 3 right now. And the conservative wave 3 target could be the 150s. Even the 161.8% extension of wave 1 is up there at the 180s. So there's a little bit of a nice low to trade against of 61. Above 61, wave 2 is ended. The length of wave 1 placed at the wave 2 low says that First Solar and Enphase Energy, they could be rallying with Tesla. They could be rallying with the Chinese EV stocks. So here is NIO. So wave 1 and a wave 2 from this low. And I think this wave 2 is ending at the 78.6% retracement. This big wick could have ended a very important wave 2. And I talk about in a lot of my videos how this could be a similar wave 2 to the one that Tesla put in early 2020, right? The very wave 1, wave 2, the wave 2 ends at the 78.6% retracement. It's supposed to be the scariest wave because it's followed by the biggest reward. Ultimately, NIO breaking above 66 is a very conservative expectation for wave 3. So right now, if NIO is above 13, then it can begin a wave 3 up to 66. Well past 66 in the long term, we could see much higher targets into the 130s, into much further levels down the road. Okay, the whole point is that it's going to take a little bit of time now that we've broken below 30, but I think that's wave 1 and wave 2 for NIO at the 78.6% retracement. I think XPEV and Li Auto are very similar kind of bases in this Chinese EV sector, and I think that they're all going to move together. This is a wave 1 and a wave 2 for XPEV. A wave 3, could show this is an IPO base. This is a wave 1 and a wave 2, so wave 3 could, be a very conservative expectation of breaking 74 in the long term. So here is Li Auto. It's another look at this kind of Chinese EV sector. And a lot of the Chinese growth stocks in general, they haven't been made easy, but I think that, with NIO and Li and XPEV, they aren't just EV stocks. So there is evidence from Enphase Energy and Tesla, but I think there's also evidence for the Chinese EV stocks from other Chinese growth stocks. This is a wave 1 and a wave 2 for Li. I think this is another wave 1 and another wave 2 that ended at the 70.6% retracement. So Li kind of shows maybe, another view with XPEV of what a big wave 3 in these 3 EV names could look like. So I hold the Chinese EV, I hold the Chinese growth, and I'm holding it for a long time, right? I don't care if someone calls me a bag holder for buying Alibaba at 165. I manage a lot of that risk up front because I know a stock like Alibaba gives me exposure to the e-commerce sector. It gives me exposure to the foreign markets. It gives me exposure to China. And I think that it's pretty naive to think that, big MMs or, anyone who's interested in investing won't need exposure to, the Chinese markets or, the growth of, the EV sector and the e-commerce sector in the big picture. I know it seems easy to say that now, but if we look at NetEase, I think this is a wave 1 and a wave 2 for a Chinese internet kind of conglomerate. This is a big Chinese internet name, and this is a massive nest, right? Wherever NetEase is going, that's probably where Alibaba is going. That's probably where, a lot of even the Chinese growth in the EV sector is going. I think this is a wave 1 and a wave 2 for NetEase. And I think this is another wave 1 and another wave 2 that ended at the 61.8% retracement. So the length of wave 1 places the wave 2 low, gives a conservative wave 3 target of 166 before a shallow wave 4 and a wave 5 higher. The length of wave 1 places the wave 4 low, ultimately can take NetEase up to the 130s. And in the big picture, in the long term, that would just end a black wave 3, in my opinion. We'd have consolidation in Chinese growth and Chinese internet, but that wouldn't be it. We'd have a wave 4 and then a wave 5 higher. And it's not even just China. It's the world, right? It's the world. It's not really meant that people who actively trade the market and draw all RSI divergence and triangles, it's not really meant that they're supposed to catch rallies like this, right? Not a lot of traders, looking at RSI divergence caught what happened in SPY and QQQ in the past, decade. And I think what we see with emerging markets, what we see with Chinese stocks over and over, is that what happened in the past decade with SPY and QQQ could happen in foreign markets. This is EEM. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And yes, another wave 1 and another wave 2. What the classical traders are going to call a breakout and back test of about a 10-year base. The length of wave 1 placed with wave 2 low gives a conservative wave 3 target of about 69 for EEM before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed with wave 4 low, then the emerging markets ETF, can double. And one thing I'll mention is a lot of the emerging markets, yes, they have the sexy growth stocks. Yeah, they have the sexy growth stocks, but they also have the stocks that aren't very fun for people with bills, right? They also have the inflation stocks. So this Petrobras is one of the biggest holdings of EWZ, the Brazil ETF. And so the consequence of a lot of the foreign markets doing really well is going to be that things get really expensive, because a lot of these foreign stocks, there's a lot of growth, but there's also a lot of inflation. A lot of the gold miners, a lot of the silver miners, they look something like this. Wave 1, wave 2, we better hope long-term counts don't play out, because there's a lot of 2011, a lot of 2008 highs in the oil sector, in the mining sector, in the metal sector. We better hope these aren't long-term counts to play out. We better hope that Chevron's the only one that goes and breaks that high. Anyway, that was a little bit of a rant, but there's a lot of opportunity in growth. One reason that I want to bring up NetEase is because NetEase and Baidu are in these social media ETFs, right? So there's a little bit of a crossover. The social media ETF, SOCL, holds a lot of the American social media stocks, but it also holds Baidu and it holds NetEase. And the reason I bring that up is because I think Twitter's breakout, while of course there's obviously, a special reason, right? There's a special reason that Twitter is breaking out. I get it. But Twitter is a social media stock, right? It's a social media stock. That means it's in social media ETFs with NetEase and Baidu, like SOCL. Anyway, this is a wave 1 and a wave 2. I think we're seeing with Twitter, maybe with Tesla, maybe we'll get a few more where we can see growth, get rotation into the second quarter, and start even into the summer, that third quarter rally. But I think this is a wave 1 and an ABC wave 2. The end of the 78.6% retracement. So if this is a wave 2 low for Twitter, understand that Twitter won't be the only social media stock that goes. It's not like Twitter's going to go to 92 and Facebook and Snapchat were just dogs, right? That's not going to happen. This is a wave 1 and wave 2. So if Twitter goes and it's within a wave 3 to the 80s and 90s, and that would just be a conservative expectation in the long term, that Twitter would go to 92 for a wave 3 before a shallow wave 4 and a wave 5 higher, then it's going to be doing it with, not just Facebook, not just Snapchat, but a lot of the social media stocks, a lot of these kind of software-ish names. Anyway, here is Snapchat. It's a social media stock. It's also at the 61.8 to 78.6% retracement. And I talk about Facebook till I'm blue in the face, but here's a 1, 2, 3, 4, 5 big wave 1. For Snapchat and ABC correction, ending a 61.8 to 78.6% retracement wave 2. The length of wave 1 places the wave 2 low, says above 21. Snapchat can enter a wave 3 up to 100 in the long term. That'd just be a minimum target. So, ideally, it's not going to be perfect like this, but when Twitter's at 92 for its wave 3 target, Snapchat, it's basically the exact same wave 1, could be at 100, right? So this is a big opportunity in growth, and it's not like it's a lot of regular people are meant to catch this, right? It's supposed to be like, oh, no, like that was a scam, right? That was a fad. Growth stocks do 61.8 to 78.6% retracements all the time. Here's one for Facebook, right? This is a blue chip. We can't call it a blue chip now because it's down, but I think this is a wave 1 and an ABC wave 2. The ended at the 61.8 to 78.6% retracement. So the wave 2 low is pretty tight. A lot of people don't like that, it's just trading against the low sometimes, but A lot of times, if I want to get exposure to a sector, I'm going to manage the risk with position size. I think Facebook's like, what exposure is, what exposure is a Facebook bull getting? They're getting a lot. It's an American large cap. It's, a social media stock. It's, it's almost kind of like a unicorn in what it does. Kind of like Disney, kind of like Netflix, kind of like a lot of these blue chips, right? We can't call them blue chips now that are at the 61.8 to 78.6% retracement. I think Facebook with Netflix is in the growth sector. I think this is a wave 1 and a wave 2 at the 78.6% retracement. So above 185, Facebook can go on a wave 3 up to the 400s. In the long term, that minimum wave 3 target would be 430 before a shallow wave 4 and a wave 5 higher. So that's where maybe a wider level of 137 would come in, but Facebook doesn't have a great low to trade against right now. I don't think it goes below 185. If we look at Netflix right now, we have so many of these blue chips, but also kind of growth names. This is in the streaming sector that are at the, 61.8 to 78.6% retracement. Okay, I didn't make up that this is where wave 2's in, right? Wave 2 into the 61.8 to 78.6% retracement. It's the most difficult wave because it has the biggest reward. It's followed by a massive wave 3 that is at least the length of wave 1, placed at the wave 2 low. And for Netflix, that takes it to about 800. Even if there's a shallow wave 4 that retests the wave 1 high, and wave 4 is, it's supposed to be shallow, even if wave 4 retests the wave 1 high, the length of wave 1 placed at the wave 4 low would give a wave 5 target of possibly the 1100s for Netflix, right? So wave 2 is the most difficult wave because it's followed by the biggest wave, which is wave 3, the most shallow correction, which is wave 4, and then wave 5, which is usually at least the length of wave 1, placed at the wave 4 low. So that is Netflix. Here's Square. I want to talk about some of these fintech stocks. This is Square. It's a wave 1 and an ABC wave 2. I think this is another wave 1 and another ABC wave 2. I think my B disappeared, but this is an ABC wave 2 that's ended at the 78.6% retracement. I'll make this B black. I thought I had my B already. This is an ABC correction that ended at the 78.6% retracement. I think this is a wave 1 and a wave 2 for Square. Not a bad low of 82 to be above. The length of wave 1 placed at the wave 2 low says e-commerce stocks have 61.8 to 78.6% retracements, like MasterCard did in 2008, like Amazon did in 2008, like possibly Square Cash is doing right now. Wave 1, ABC wave 2, the length of wave 1 placed at the wave 2 low could give a wave 3 target of 340, and that could be conservative, and yes, the long term. So that's Square Cash. I think it's going to be holistic, right? It's a holistic, approach. I think this is Tiger. I haven't talked about this one, but this is a small cap fintech name. Realistically, if I invest in this, it's going to be with a very small position size to compensate for that high beta. But this is a wave 1 and a wave 2. And I just want to show it's very holistic in the fintech e-commerce sector. It's a real small cap name, but I think it's a wave 1 and an ABC wave 2. The length of wave A placed the wave B high could be where a very important wave C is ending a wave 2. The length of wave 1 placed the wave 2 low says going and breaking the wave 1 high is a very conservative expectation in the big picture for a wave 3. A lot of times wave 3 goes even further than that. So very volatile name, but it's in the fintech sector. Very similar idea with Square, with PayPal, that this is a big wave 1 and wave 2. And wave 2 is the most difficult wave because it's followed by the biggest reward. And I think that a lot of these fintech names, these e-commerce names, going to end up being holistic evidence for crypto as well. So here is Shopify. It's exactly like the PayPal chart. 1, 2, 3, 4, 5, wave 1. ABC wave 2 at the 61.8% retracement. Above 391. The length of wave 1 placed at the wave 2 low. I like this. That's good RR. The 78.6% retracement of 391. The length of wave 1 placed at the wave 2 low could give a wave 3 target of about 2,250 before a shallow wave 4 and a wave 5 higher. Okay, so we'll see. I'm very curious. We're documenting right now. All right, let's see who's bullish the moat and the Kager of Shopify right now, because we're gonna be hearing about. I swear, you guys will know what I'm talking about. You guys will know what I talk. They talk about Shopify's moat and Kager when it rallies. I swear, and they're gonna be doing it again. This is the 61.8 to 78.6% retracement. Wave 1, wave 2. We're going to Kagerville. All right, we're going to Kagerville for Shopify. You will read about it in people's Substacks. Here is a wave 1 and a wave 2 for Asana. It's all these growth stocks sending the same message. Wave 1, Wave 2 is the most difficult wave because it's followed by the biggest reward. The length of Wave 1 placed at the Wave 2 low can take Asana up to the 150s before a shallow Wave 4 and a Wave 5 higher. So Asana, I don't think there's a great low to trade against. 20 isn't bad, but this is a Wave 1 and a Wave 2, so the length of Wave 1 placed at the Wave 2 low says 155 could be a conservative Wave 3 target. It could be, the more recent the IPO, the bigger the risk reward, because we're very early in Asana's life cycle. So, especially when a stock is young, it's got that high beta, but a lot of times the risk is worth it. So this is Wave 1 and Wave 2. Asana's going to be in the worth it category for sure. Anyway, here is Palantir and Fastly. They've made these two names difficult, but what have we been talking about for the past 20 minutes? There's a whole lot of growth names that kind of say, okay, we can see the big Wave 3. Now, I won't talk about I like AMC, but I won't talk about how Palantir is a meme stock, but it's seen that kind of same level of option activity where it's on this screener every day, the bar chart strangle screener. We've seen, huge moves in stocks that occur on this. And I really want to kind of be focusing on this in the future, but I know it's all about price. So here is Palantir. It's a Wave 1 and an ABC Wave 2. I think that this is a Wave 1, and if we're above 8.90, it's in. This is Wave 1 and Wave 2. This is a very kind of just like Asana, kind of just like, a couple of the more recent IPOs. If this is Wave 1 and Wave 2, there's a higher risk and higher reward with more recent IPOs because the Wave 3 target isn't 45. Okay, that's a very conservative expectation. A lot of times Wave 3 is much larger than the length of Wave 1 placed at the Wave 2 low. Wave 3 can go to the 161.8% extension of Wave 1, which I can't say when Palantir is at 12. Okay, but if we're above 8.90, this is Wave 1 and Wave 2. Palantir can begin Wave 3, fill out the right side of the base. This is the left side of the base, right? Palantir is the fad, it sucks, and then all of a sudden, we find out why they've been buying options on it, and I think it's going to be, I hope they don't blame the Redditors, but anyway, here's Fastly. It's a similar software idea, okay? I didn't think we'd be trading or looking at Fastly against 10, but this is Fastly. It's a Wave 1 and an ABC Wave 2. It hasn't broken below 10. That's the beginning of Wave 1. The length of Wave 1 placed at the Wave 2 low says, just like Palantir, breaking Wave 3 above this Wave 1 high is a minimum expectation. All right, and it's supposed to sound crazy. It's supposed to sound like, oh, that's never going to happen. Long-term counts don't play out, but there are multi-year growth rallies. All right, and the people who catch them, they usually do it by buying 61.8 to 78.6% retracements that are not fun. And I think this is a Wave 1 and a Wave 2 for not just Palantir, but a lot of the software sector, a lot of the recent IPO software sector. For Fastly, if we're above 10, and for Palantir, if we're above 8.90, this is Wave 1 and Wave 2. We can begin a Wave 3 above the Wave 1 high in the bigger picture. So that's Fastly. I think there's a lot of software holistic evidence from the ECAS sector, from some of the Chinese stocks, from some of the cryptocurrencies that we're going to start to see, a new day in growth. Okay, so here is crypto. There's a Wave 1 and a Wave 2 for Bitcoin in the all-time chart. If we zoom in on Bitcoin, I think from this low, it forms a Wave 1 and a Wave 2. So I think Bitcoin looks like something like this. 1, 2, 3, 4, 5, big Wave 1 and Wave 2. This is a Wave 1 and a Wave 2 that formed from this low. So the conservative Wave 3 target is the length of Wave 1 and place at the Wave 2 low. That's about 73K. Now, if Bitcoin gets and starts running, then the Wave 3 target is going to be actually a lot higher than 73K. But even if there's a shallow Wave 4 to retest the Wave 1 high, the length of Wave 1 placed at the Wave 4 low can take Bitcoin on a Wave 1, 2, 3, 4, 5 waves impulse up to 109,000. So this is kind of in that eCash idea that this sector's been accumulated for a while. I think this is a Wave 1 and a Wave 2 above 28.9K. That's very much the case. This is a Wave 1 and Wave 2 that's formed. So the minimum Wave 3 target is 73K before a shallow Wave 4 and a Wave 5 higher. Ultimately, I think 109,000 is going to be where Bitcoin ends this red Wave 3. Ethereum is a nearly identical view. In the big picture, it's a Wave 1 and a Wave 2. Whether or not this is another Wave 1 and another Wave 2 or a Wave 3 or Wave 4 doesn't really matter, because I think just like Bitcoin, it's a Wave 1 and a Wave 2 that forms from this low. So if we zoom in a little bit, this is a Wave 2 that ends for Ethereum right around the 61.8 to 78.6% retracement. So this is a wave 1 and wave 2. The length of wave 1 placed at the wave 2 low can take Ethereum up to about 5.3K before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then above 1709 and a little tighter would be 2160. Waves 1, 2, 3, 4, and 5 can take Ethereum up to 8,000. So I want to remind that it's not just Ethereum and Bitcoin. It's also Mara. But anyway, no, it's not just Ethereum and Bitcoin. There's a lot of cryptocurrencies that, just like, you can't stare at SPY to analyze the market when all the value stocks are at all-time highs. There are other cryptocurrencies, and I think that a few of them are giving kind of very bullish messages. Here's Ripple. It's a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 for XRP. And I think we're going to see this wave 2 low hold of about 51 cents. We're going to enter a wave 3 up to the 161% extension of wave 1, which is 3, before a shallow wave 4 and a wave 5 higher. But I think in the bigger picture, what I'm most interested in is that this is a wave 1 and a wave 2. And if I take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, there's a real pretty Andrews pitchfork. I think Ripple is going to go to the lower bound of this pitchfork, and then ultimately it's going to do something crazy. It's going to go to the median of this Andrews pitchfork, which would be above 3, above 4, possibly even higher than that. So I think that there are some kind of moon boy counts in the altcoins. I think Solana is another one where you get a little bit of a moon boy look. This is a wave 1 and a wave 2 at the 61.8 to 78.6% retracement. All right, get the laser eyes out right now. Above this small degree wave 1 high, 58, it's a little tight, but that's not the reason I say tight. Is that Solana has a high beta, right? Ripple has a high beta, and they also have high price targets, right? So a lot of people are going to think, oh, well, that means I'm going to go all in Ripple and Solana, right? No, it's the opposite. Because they have such high betas and because they have such high reward potential, I personally take much smaller positions because I compensate for that high beta, and a lot of times I'm not really using a stock to manage risk. I'm using option straddles a lot of times for stocks. I really want to get into exactly the ones that I'm buying, but a lot of times another way is just by taking a smaller position, because Solana shows this is a wave 1 and a wave 2, right? The length of wave 1 placed at the wave 2 low can take Solana up to the 330s, all right? That's an altcoin that could more than triple for just doing the length of wave 1 placed at the wave 2 low, right? How many times in this video have I talked about the length of this rally placed at this low being a conservative target, okay? This is the 61.8% retracement where a wave 2 can end. Wave 1, wave 2, the length of wave 1 placed at the wave 2 low can take Sol up to the 330s, all right? That's an altcoin doubling. That's an altcoin tripling, possibly. So I think it's evidence for Bitcoin. It might be something for crypto bears to think about. All right, it's not just the Bitcoin chart. It's not just the Ethereum chart. I'm not trying to taunt anyone or anything, but I think that Solana and Ripple, they kind of show a more bullish message for crypto, right? It's kind of that moon boy laser eyes look. For Sol, pretty tight would be 75. I think 58 to 55 would be quite wide. But this is almost identical to Cardano. Wave 1, ABC wave 2. Now, the minimum wave 3 target is over 300% upside. So that's Sol. You can do ADA. Very similar look. I need bar chart to get Shiba. I know Robinhood has Shiba, but bar chart doesn't have Shiba coin. I'm sorry that I can chart a Shiba Inu coin. Anyway, this is a 1, 2, 3, 4, 5 wave 1 for Cardano and an ABC wave 2 at the 61.8 to 78.6% retracement. So above the 78.6% fib of 67, it's the same kind of look as Solana, where it's like, this is wave 1, that's wave 2, so the length of wave 1 placed at the wave 2 low. At least it's not it's only a 500%, minimum target for wave 3 of 3.80. So there's a lot of upside in crypto. I think for Bitcoin and Ethereum, the wave 1 lows of 28.9K and 1.7K would be a little wide for Ethereum. I think 2.1K would be a little tighter. But I think that there's also the 78.6% retracement for Cardano. There's Ripple above 51 cents. And I think the length of wave 1 placed at the wave 2 low says that it's not just going to be Bitcoin and Ethereum. We could see Sol, we could see ADA, we could see Ripple enter a large wave 3 to the upside.